All right, everyone. Here we are with ticker symbol GME, Gamestop Corporation. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. At the end of this video, there's going to be a pop-up video. I highly recommend watching it. It's for all investors and viewers to watch and gain really great information. If you haven't had a chance to watch it, I talk about the S&P 500 and how the Federal Reserve has scheduled pump dates, and tomorrow is one of them. So if you haven't had a chance to watch it, there are some great information in there for every investor to check out. And you can also analyze how the S&P did today and how it could possibly do starting tomorrow. But another thing I want to state too is how GameStop had a run, and here we are now seeing it level off. And yesterday I had stated if this broke through the 50-day moving average, this could be on its way down to newer lows and newer support levels. Now it's kind of going in a sideways direction, so there wasn't much of a fall. The hard fall was honestly last week, and today was honestly a bullish run that was started in the morning, in the beginning of the day, and then quickly after it started to plummet. So we're also seeing here how at the beginning of the day, towards the middle of the day, from the morning till mid-afternoon all the way till now, it actually started to fall and the bears are taking over. So let's go ahead and move this to their new locations. And by the bears breaking through the 50-day moving average, they're actually moving this one down to newer lows and starting to break through newer support levels. Now the question is, will this bearish run continue, or could the bulls have a recovery? I mean, they hit this high here and quickly after got rejected, and the 50-day moving average is about to cross over the resistance, making it even more bearish of where we're at. The 50-day moving average is 1250, super important number right now, and that lets us know on what side of the chart we're in. Obviously we're in bearish territory because we're below it, and if we go above it, we're in bullish territory. So right now it's at 1180, important number for every investor to keep in mind. And we're in post-market hours, so if this was to continue to work its way down, it's very important to pay a close eye on how this is reacting, and however low it reaches, that could be the new support level in the next coming hours. But I don't think the volatility will be that much unless the bears are really destroying this chart. And whatever number this is post-market, I'd pay very close attention after the market closes at 8 p.m. for tomorrow, how that number is, if it's below 1180, and if it is, pay very close attention to that number for tomorrow, because if it breaks through that, this could hit newer lows and newer support levels. But right now, based off of what the charts are showing us, which I highly doubt it's going to move by much. If it moves, it's by a couple cents, but not by a whole drastic number or whole number. And right now, again, 50-day moving average is 1250. The bulls need to break through that to get back into bullish territory, but the bulls' goal is really to break through this resistance level. If they accomplish this, they broke through both. They broke through the 50-day moving average, getting back into bullish territory, and they broke through the first resistance level that needs to be turned into a support so that they can start to break away and hit newer highs and newer resistance levels. So super important for the bulls to break through this resistance level, which is 1275. I'd write that down. That's the highest point, and a rejection was formed from that point forward, getting into bearish territory. So the bulls need to break through this. They've accomplished breaking through 1250. They broke through the resistance, turn that into a support so they can break away to newer highs and newer resistance levels and further away from the 50-day moving average in an upward direction. On the other hand, we have what the bears want. This is a very important number. 1147 is our support level, and the reason why it's so important, and I definitely write that down and pay very close attention to how this stock is reacting if it gets close to this number or breaks through it, because of the fact that we're already in bearish territory, and breaking through the support level is just getting deeper and further away from the 50-day moving average in a downward direction into bearish territory. So if 1147 is broken through, I really want to emphasize, pay very close attention to how this stock is reacting and how quickly is it moving to newer lows. Are the bulls even trying to reappear and bring this back up? Or is this just hitting new support levels every time fairly quickly, and how it's reacting? Super important, because 1147 is the support level right now. It's the lowest point in the last couple hours of the day. And after this slight run up, this is the lowest point reached after that rejection that we're at. So I'd pay very close attention to how this stock is reacting and what's going on, because that just means that we're already in bearish territory, and this is going to get deeper into bearish territory if it starts moving fairly quickly to newer lows and newer support levels. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. Don't forget to turn on all notifications by clicking on the bell. And don't forget to hit the like button and let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date, it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.